consequential French election kicks off over the weekend, and the outcome could have big implications for broader European markets. We're looking at how U.S. investors can navigate the big picture with the Yahoo Finance playbook. And we're joined by Ben Emons, founder and chief investment officer at FedWatch Advisors. Good to see you, Ben. So the setup here is that Emmanuel Macron of France has called this snap parliamentary election. It was a surprise for pretty much everyone in France, including those in his own party. But it looks like what could happen as a result is that particularly some of the right wing in French politics could gain some ground. We've already seen a lot of volatility in French assets. How should investors be thinking about this situation?
Yeah, I think, Julie, it's once again a story about France being in trouble with its management of its debt. You know, the European Union, the Monetary Union, has certain specific rules around deficits and debt. And these right-wing, also left-wing parties have a very different view about it. They view that we shouldn't really be following those rules. And since they have gained so much in the polls and that has woken up Macron and he's called those snap elections, investors suddenly are aware of, like, wait a minute, there's this euro risk now centered in France. And people are maybe looking at this too as a sense of, like, well, what happened with the UK years ago, the Brexit, that this becomes this idea of Frexit. Now, I think what really happened here, though, Julie, is that there was an initial reaction in the CAC 40 index quite sharply, and that sort of recovered. I think the play as investors is that this election will be really about a new coalition in Parliament, and it then depends a bit on how a coalition is formed. What the ultimate outcome will be for investors of, will France really tilt to a side where it doesn't follow the rules, or that it still is some compromise? Looks like from the price action some compromise, so it looks too that the initial reaction is quite sharp. It has made, I think, some of the European tech stocks as well as small caps relatively attractive to US small caps and tech stocks.
So you're suggesting, Ben, despite all these headlines, that what's happening in France here, this could be for investors an opportunity here?
I think it is, because, you know, oftentimes when you get these geopolitical tensions around a certain subject, like this case, a political issue, it seems that the populists don't really get much anywhere, right? They may get re-elected or get elected, but they can't form a government or have trouble to form a government, and therefore not all their plans materialize. And so as you're getting this adverse reaction in the stock market, it seems to have overshot to the downside because the new future government cannot do much. And then therefore it becomes an opportunity. So I think this is an opportunity to take risk here.
It is an opportunity. How would you do that, Ben? Would you get into equities in France, or would you be looking at debt? What's the best way?
I think both, Julie, because French bonds, if you think of it like these are the more safer assets in the eurozone compared to, say, in Italy or Greece. And because of the ECB's major influence on these markets with rate cuts already coming through, those bonds look interesting. But French stocks to an extent too. I mean, what has really sold off are the French banks. Those are well-capitalized institutions now, so that looks really overextended. So I think you can play both French stocks and bonds going into the election.
What about, Ben, I don't know if you have thoughts as well, UK elections set for early July. Any thoughts there, Ben, how you're thinking about that as an investor, as a strategist?
Yeah, I think those elections are similar, although different issues happening there. But, in the UK, it's been all about inflation. That's like we have our election here will be much centered around inflation. And I think there it's a different story. It's more about if we're getting a different government, it probably will more be about, will this government actually tackle austerity, which the UK tends to be more focused on, bringing the deficit down. But what will happen really to inflation? That's not clear. If anything, if there's going to be a lot of confusion about what fiscal policy will do, inflation picture may not necessarily change. And yet the Bank of England is sitting there trying to cut rates at some point. So I think UK is a little in flux here currently. I don't think there's a clear opportunity there compared to the situation in France, which looks much more of an overreaction to these geopolitical headlines.
It's interesting, Ben, because in general, we have seen some of the rightward-leaning parties gain ground in continental Europe in particular. Outside of France, are there other areas where you think things have been sort of mispriced and you think there are opportunities?
Well, we have a very subdued volatility environment, Judy, and so it has made some of the opportunities a bit limited. I think now what happened over the last maybe week to 2 weeks in our own market here in the US, you get suddenly a stock like Nvidia really drawing down by 15% and it pops 7% higher today. It's sort of like these really short-term opportunities. I think we have to wait and see what happens with our election in particular. What will be the dislocation coming from that? The presidential debate that comes up now may be the first catalyst for markets to start thinking about like who really has the best shot here. If it's going to be tariffs and tax cuts, or it's going to be again more fiscal spending. So I think in the next 2 days we're getting maybe these mispricing more clear here in terms of the U.S. markets, for example, more opportunity to see if there's opportunity to take risk.